Hello and welcome back to ANCAP Radio, Strategic Wealth Preservation Inside the Vault. You guys go ahead and take it away.
Welcome to Inside the Vault with SWP. Join Mark Yaxley as we explore the latest news, reports, and some bullion basics for investors old and new. Let's get to it.
Hello, everyone, and welcome back to Inside the Vault with SWP, a weekly show where we dive into the world of precious metals and precious metals investing. For those of you that tuned in last week for our first episode, thank you very much for joining us again. If you didn't catch the first episode, be sure to check it out on ANCAP Radio or SWP's Twitter accounts. I'm your host, Jeremy Varlow, and I'll be joined by my colleague, industry veteran Mark Yaxley, in just a moment. As we mentioned last week, Inside the Vault with SWP is one of the most viewed sources of information on precious metals investing on YouTube, hosted, of course, by Mark Yaxley. I highly recommend checking those videos out if you're interested in starting your journey into precious metals and want to learn more, or even if you're a seasoned investor, there's truly something there for everyone. We're incredibly excited to expand the show in podcast form through ANCAP Radio. Thank you to ANCAP Radio again for having us on today. So on today's show, we are going to cover our weekly market update, discussing the metals markets over the past 7 days, as well as the top stories that we are following around the globe that affect precious metals prices. We'll also dive into our weekly bullion basics, a quick hitting segment designed to educate novice and savvy investors alike on how best to invest and safely store metals. And also on today's show, we have renowned speculator and international investor Nick Giambruno, who joins us, founder of the Financial Underground. He'll be with us shortly for a conversation. So let's jump straight into things and bring in Mark for our weekly update. Mark, how are you?
Jeremy, I'm doing well. It has been a busy week since we last spoke, so looking forward to sharing the latest updates with everybody out there.
Yeah, it sure has. We've got a lot to get to, so let's jump right into it. A quick word for our audience. If you have any questions for Mark or Nick, please don't hesitate to raise your hand if you're here in Twitter Spaces. Shoot a DM to the SWP Twitter account or email us your questions at info@swpkman.com. But Mark, yeah, like you said, there's tons to get into. Pretty strong week over the last 7 days for metals, amid some pretty ominous news coming out of the Middle East. Let's get your take on the last 7 days.
Yeah, obviously, Jeremy, all eyes are on Israel and Gaza at the moment. It's obviously a very sad event that's taking place, very tragic event that's taking place right now, but it has translated into a significant rise in both the price of gold and silver. That ties into a thread that we're going to pull on quite a bit today, which is geopolitical risk. I know Nick is going to be just biting at the lip to share his insights on that. But what we've seen over the last week since we last spoke is a rise in the price of gold of about $100 an ounce. That's 5%. Silver's also up $1.50 an ounce, about 6% since the beginning of the conflict. This is a clear reflection of renewed interest from both buyers of physical precious metals and the ETFs. Both of those market segments had been quite dormant prior to the conflict. So this has really got everybody's attention. Obviously, the conflict is driving safe haven investing. That is the primary reason why we're seeing people flock towards gold and silver at the moment. The central banks continue to be strong buyers, so they're also supporting the price increases that we're seeing. Now, worth mentioning, as far as conflicts go, there's kind of a few factors to consider. One is going to be the intensity of this conflict and how long it progresses for, and that's unknown at this point in time. But it seems, based on this morning's news, and press releases by the Israeli Defense Forces, that it should continue for some time, and it is going to remain a significant conflict in the near future. So you can expect that the price of gold and silver are likely going to be increasing. We saw with the Russia and Ukraine invasion, the price of gold rise about 8% out of the gates of that invasion, and silver was well over 10. So I think there still is some upside. And that's attributed to what we call, and it's a very unfortunate term, but what we call the war premium on gold and silver. This is what happens with the precious metals when we see international conflicts. And a good reminder, something we touched on last week in the program, we talked about black swan events. Again, this is not news that anybody wants. You never want to see people suffering, people being, murdered or missiles being launched. Of course not. But these are the type of events that people do need to prepare for. And having a safe haven investment like gold or silver in your portfolio, this is a very good example of why you need to be doing that. And again, I think Nick Giambruno is going to do a great job of touching on that a little bit later in the program. A little bit closer to home, finally, in the United States, the US dollar is still trading very, very strong. If you look at it compared to its historical median, it's still well above that median. So the gold price is at about 1950 right now, and that's in the face of a very strong US dollar. If and when the US dollar cools off, you will see further increases in the gold price. And also the last note is the Fed will be meeting again at the end of October to discuss the next potential interest rate increase, which will be significant news for gold and silver.
Yeah, thanks for that, Mark. It's clearly a very interesting time in the metals market and just around the globe in general. As you touched on at the end there, aggressive Fed monetary policy, high interest rates tend to be a little bit bearish for metals prices. And, on the flip side, we have these geopolitical conflicts that tend to skew the prices the other way and be a little bit more bullish. And I think this is actually a great time to draw our guests into the conversation here. As I mentioned, we have Mr. Nick Giambruno joining us on the show today. Nick is the founder of the Financial Underground and the editor-in-chief of its investment research publication, Contra Speculator. Welcome to the show, Nick. It's great to have you.
Hey, great to be with you guys.
So, Nick, before we get into things, I was just hoping you could maybe tell us a little bit about your background. You've been in kind of the investment space for quite a while. I'd like to just understand how you've developed your macro thesis in terms of finance, economics, geopolitics, how it all plays together, and what led you to create the Financial Underground and who it's for.
Yeah, certainly. Well, I'm a longtime friend and colleague of Doug Casey, legendary speculator and anarcho-capitalist. I've traveled the world and traveled to many odd locations with Doug, and I have an interest in, just understanding how the world works, the true nature of money and finance, because it's obvious that most people don't, and the mainstream is lying to us on this, not just the mainstream media, but in college, they don't teach you real economics, they teach you fake economics. So look, I'm just a truth seeker, I guess, is if I could distill it down to that. And I like to find ways that I can invest on seeing things that others don't see. And that's why I founded the Financial Underground. Kind of the byline is uncovering the truth about money and markets they don't want you to see. And that, I think, sums it up quite nicely.
Thanks for that, Nick. And, just kind of off the back of what Mark just spoke about there with his market update, I wanted to get your thoughts on, the push and pull between Fed policy and the geopolitical events that we're seeing playing out at the moment, its effect on, not only precious metals, but the broader markets as well, how you're seeing things and, if that's playing into your thesis a little bit.
Well, sure. Well, first, with regard to Fed and monetary policy, this is, one thing people have to always remember when you hear these clowns on TV is that central planning doesn't work. It doesn't work when the Soviet Union centrally plans potatoes or Cuba centrally plans, other things, or North Korea centrally plans their economy. Centrally planning money, which is what central banks do, is an impossible task. It's not possible for humans to do. So what these central banks are engaging in is a giant charade. They can't get anything, they can't get it right, not because they're not good. It's just because it's a mission impossible. It's central planning. You just can't centrally plan anything. So the idea of monetary policy is a complete joke. It should be totally left up to the markets. But of course, that's just not how it works today. So these people are a factor. A strong factor you have to consider. So I think people should always remember that when you hear these clowns talking about how they want to tinker with the economy and fine tune the economy as if it's like a thermostat, which it's not. Anyways, so they're in a pickle because they're trying to contain inflation, and of course. This is also another point of misunderstanding, is that, the real definition of inflation, as many of the listeners may know, is an increase in the monetary money supply. That's what it always has been. If you look in the Webster's dictionaries prior to the year 2000, that's what you'd see. If you looked up inflation in the dictionary, it'd be an increase in the money supply. Very intuitive. And then they changed it subtly to a change in the general price level, which sounds like a subtle and harmless change, but it's really not. It obfuscates who's causing this unnatural phenomenon to occur, which is the central banks, who are, inflating the money supply. Anyway, so they're trying to fight price rises, which are out of control, and they're not accurate. How the government measures it. The CPI. Look, we don't need to go off on side tangents here, but I think, needless to say, your listeners should probably know the CPI and other government statistics are garbage. They're totally manipulated and don't reflect reality. There's plenty of anecdotes. I don't need to tell you this. People can just go to the grocery store and see if the inflation is what the government is telling you. And I think it's pretty apparent it's not. Anyways, they're trying to fight this by raising rates. And this is a problem, though, because of all the debt. There's so much debt. The world is saturated with debt, from the governments and the sovereigns down to the consumers and businesses and corporations. It's because interest rates have been artificially low since almost at zero for many years, which had caused the people to gorge on debt. So this is a problem for them. The high level of debt is going to limit how much they can actually raise interest rates to combat inflation. And we're going to find out soon where the end of that runway is, and I suspect it's not far. What may accelerate that is what's going on in the Middle East and wars. And just what goes with wars? You can go look at all the way back to the Romans, even before the Romans. What goes hand in hand with war? Currency debasement, creating more inflation. So these wars, if you can distill down one effect of these wars, and obviously the human cost, it's atrocious, it's heinous what is going on. It's sickening. But if you could boil it down to one financial effect, it's currency debasement, more inflation. And that's always been the case with wars. So you have these monetary central planners trying to keep inflation under control. And then you have so many other factors pulling in the other direction. I think we're going to see something break very soon.
Yeah, it's fascinating, and it seems like it's all playing out right in front of our eyes. One thing that I wanted to ask you about then is, how does the average person prepare for this? And, you've spoken a bit about, geodiversity, both from, a location of assets and investments, as well as in terms of, what passports you hold. So maybe talk a little bit about that, and just, some other ways that, the average person can prepare for something like this.
Yeah, well, quite simply, what you don't want to do is to put your money, your savings, your life energy into something that somebody else can create with no effort. It's actually ridiculous if you think of it in that way, and that's, I think, the accurate way to think of it. And government, I think one of the biggest swindles, maybe it is the biggest swindle of human history, is central banking. They're giving everybody fake money, and then most people kind of thoughtlessly get on the treadmill and run on a 9-to-5 job, like on a hamster wheel, chasing after these pieces of physical and digital confetti that some people can create with no effort. I mean, it's completely absurd. It's a form of slavery, if you really want to be accurate about your terms. And because you're forced to do it, you're forced through legal tender laws to use this crap as money. And that's not how money is supposed to work. And put it another way, imagine if Al Capone in his neighborhood He forced everybody in his neighborhood to use pieces of paper with Al Capone's signature on it as money. Al Capone could make it out of, it cost him nothing to make a piece of paper with his signature, and he could send his goons over and threaten violence and inflict actual violence on people who disobeyed. This is exactly what the fiat currency system scam is all about, except it's just that on a much, much, much larger level. And most people thoughtlessly accept it as the normal state of affairs when it's not. So what you first can do is understand money, and money is not hard to understand. Understand money, and then, don't save your money in government currencies. You're basically just donating your life, because it takes time, and time is life, to earn money. You're donating it to these criminals. So don't do that. I mean, yes, everybody needs some money, fiat money, for practical means to pay their bills, but for long-term savings, my God, it's terrible. So, think of something else to put your money in. And I include bonds are just long-dated fiat currency. It's a promise to pay you fiat currency in the future. Bonds are horrible. They're a terrible way to save money. And most people save money in bonds. They have the 60-40 portfolio. Most older people who are closer to retirement think bonds are a safe investment. It's completely ludicrous. So don't put your money into something that somebody else can create out of thin air, would be number one. So what do you put your money into? You want to put your money into something that is not easy for somebody else to make, something that is hard to produce. That's where the word hard asset comes from. It's a hard to produce asset. So you want to do that. Primarily gold. Gold has been the king hard to produce asset. I like gold. I personally don't like silver for long-term savings. I think gold is far superior to silver. If you want to speculate with silver, that's fine. That's not long-term savings. That's speculation, and I think that's fine to speculate with silver. But for long-term savings, I would look to gold. And then Bitcoin is a new thing too. That is definitely a hard-to-produce asset. It's an emerging asset. Gold has been around for thousands and thousands of years. It is an established store of value asset. Bitcoin is an emerging store of value asset. So it's kind of a mix of both. But if you want to look at the safest long-term store of value as of now, you've got to look to gold. And I mean physical gold, not some IOU gold, which is not gold. It's a promise to pay you gold from people who you should give no credibility to. These ETFs and these large bullion banks, they're all criminals, frankly. You don't want to have an IOU from them, because you're not going to get anything. You're going to get the rug pulled from you when you need it the most. So you want physical gold. You want it in your name. You don't want to have debt. You don't want to have any other competing claims to your gold. Only you. You want to be as close to your asset as possible. So that's what I would recommend.
Thanks for that, Nick. I want to pop over to Mark and get his thoughts really quickly on the same question.
No, I completely agree with Nick. I think we both come from the same school of thought on that. We often advise our clients here at SWP when they ask us the question, should I be investing in gold or silver? Very much in line with what Nick answered. I think gold is the pillar of any precious metals and portfolio long term. That has proven to be kind of the best performing, most stable precious metal. That is a larger market metal. Obviously, rhodium is the highest price metal right now, but that's a little bit more speculative and has its own market dynamic. So I think gold has to be a big part of your precious metals portfolio. And then silver is your play. Silver is, you can speculate on it. It's obviously a little bit more dynamic in a bear market or a bull market. You're going to see the value rise and drop more significantly in those markets than you will see with gold. So totally in line with Nick. I wanted to pop back to you, Nick, for 1 second, just on the conflict in the Middle East. I know that you've spent a significant amount of time there yourself. You've worked in the Middle East. So it would be interesting to hear your insights, because I think for Canadians, for Americans, we're seeing the news, but we don't really understand kind of the context, like why did this escalate so quickly? And probably more importantly, and what I'm getting at here, because it really is what precious metal investors will be after. Do you expect this to kind of quietly fizzle out over the next couple of weeks? Or do you think this conflict could be, of major impact on the global economy and obviously on the price of gold and silver going forward?
Yeah, well, certainly. It's a terrible, heinous conflict, as I'm sure you've seen and your readers have seen. It's all over the news. So, everybody has their opinions on who's the good guy, who's the bad guy. But here we're concerned about the financial implications, and the financial implications are enormous. Because I don't think this is going to be contained. I think this is going to. It has the potential. Nobody knows the future. I don't know the future. Anybody who tells you they know the future is lying, obviously. But I think there's a great likelihood that this could expand. And what does that mean? It means it's going to suck in regional countries, so it won't just be non-state actors that are fighting Israel. It will be possibly state actors. You might look at Syria and Iran getting into this, and possibly other countries. For better or mostly worse, I think most Western countries are attached at the hip to the Middle East. I don't think anybody, the U.S. and Canada, they're thousands of miles away. This is nothing to do with the U.S. and Canada. It's not. They shouldn't have a dog in this fight, but they do. And the reality is they're going to fund their side with a blank check, much like they've been doing with Ukraine, perhaps on steroids. If you thought the Ukraine spending was out of control, wait till you see what happens in the Middle East. It goes back to my first point. War equals currency debasement. It is absolutely certain. I think that is a guaranteed outcome of what is going on here, is that you're going to see more currency debasement. I mean, the U.S. government is just talking about today $100 billion they're going to funnel into this and other conflicts. That's a lot of money. And the U.S. debt is spiraling out of control. I always tell people to put these numbers into context, because you hear, billion, trillion, and you don't really wrap your mind around it. But I just always tell people, think of $1 trillion. How big is $1 trillion? If you earned $1 a second, 24/7, 365. So if you earned $1 a second, 24/7, 365, you'd make about $32 million a year. That's a lot of money. Okay, so if you're making $1 a second, how long would it take you to earn $1 trillion? The answer is it would take you about 32,000 years to earn $1 trillion, earning $32 million a year. That's an astronomical amount of money. It's incomprehensible to the average person. So these criminals, these government officials are criminals. They're basically spending the future generations' money and stealing from savers when they're doing this, because the only way they can finance it is with debasing the currency on an enormous scale. So that's what we're talking about here. We're talking about more currency debasement, but there's even more profound implications, because if this conflict does spread, and I think there's a very good chance that it will, what does war with Iran mean? People don't really get that either. They just think, maybe it's going to be like Iraq. Iraq and Iran are, they sound the same. They are neighbors. It's not going to be the same. This will be the biggest war since World War II. By way of comparison, the U.S. military and Pentagon has done plenty of war games on this. There was one, I think it was called the Millennium Challenger, they did in the early 2000s at a cost of $250 million. Imagine that, a war game. You're setting up a war game, like an elaborate game, and it cost $250 million to put on. They had to actually cancel this war game early because Iran won. And that is not a controversial thing, because if you look at it militarily, what does that mean? Iran has the capability to do a lot more damage than Saddam Hussein ever did. Iran has sophisticated anti-ship missiles. They can take out the base. I mean, it's nasty. It would require, the war games have conclusively proven this, and I see no reason to doubt this, that if they're serious about going to war with Iran, they will lose unless they do a massive ground invasion. And I'm talking a lot of people. I'm talking about bringing back the draft. This will make the Vietnam War, look like a picnic. So bring back the draft, they'll have to bring back the draft. There's no way they could have enough soldiers to do a ground invasion, and it would necessitate a ground invasion, because if you don't, they're going to lose of Iran. When was the last time Iran had a ground invasion? It was in the 1980s when Saddam, remember when Saddam Hussein was the good guy? He was the good guy back in the 1980s. And he was supported by the US and he was supported by Europe. he was supported by all sorts of people to invade Iran. And he did, with hundreds of thousands of soldiers, and he actually used chemical weapons on a scale not seen since World War I. And you know what? He barely made a dent. Even with unlimited money, unlimited political support, and using chemical weapons, he barely made a dent into Iran. Why? Because a lot of countries in the Middle East have fake borders. If you just look at the map, they look like zigzags that somebody drew on their desk, and they are. But one that is not fake are the borders of Iran. And the reason they're not fake is because they reflect natural geography. There's an enormous mountain range. Iran is like a fortress enclosed in mountains. It's a complete nightmare for any potential invader to go through. So these people, there's a lot of bluster going on, but if they're really serious about doing this, this is going to be a big thing. And I think it could, I can see a path that it could lead to this. And I don't think people are appreciating how serious this could be. So what are the investment implications of this? Well, the clear-cut cases, if there is going to be a full-scale war with Iran between the U.S. and Iran, because who is going to go to war with Iran? Israel can't go to war with Iran. There's no way. Israel's a tiny little country way far away from Iran. Maybe they can do a couple of airstrikes, but that's not a really, they can't do a full-fledged war. Who's going to have to do that? The U.S. is going to have to do that. There's nobody else who's going to do it. So if that really happens, you're looking at them closing the Strait of Hormuz, which they can control, which is this little tiny waterway that connects the Persian Gulf to the wider oil markets. And if they do that, you can see oil prices going up, I don't know, 5 times or higher. I think that's quite reasonable if they close the Strait of Hormuz, and they can close the Strait of Hormuz. Again, the war games, the Pentagon's own war games have conclusively shown this. But yes, so oil is going to go up. What happens when oil goes up? Inflation goes up. So, I mean, you're going to get lots of currency debasement from not just the actual printing of money, but from oil causing that part of the equation too. Oil is an input in basically everything. So if oil goes up by 5x or more, yeah, you're going to see a lot more inflation. But even more than that, there's another thing that people don't also understand is that if oil goes up a lot, nobody knows what would happen if they block the Strait of Hormuz, but I think 5 times what it's at now, 3 to 5 times is a reasonable guess. If that were to happen, what do you suppose would happen to all of the derivative books of all of these too big to fail banks? Goldman Sachs, JP Morgan, they all have oil derivatives on their books. And if oil has this crazy event where it goes up 3x to 5x, I would say it's a good chance that it's going to blow up these big banks' derivative books. That means it's like knocking over the domino that will take over the whole fiat system, because if all of these too big to fail banks go bankrupt, well, what's going to happen? They're too big to fail. So the central bank's going to step in and print a lot more money. I mean, we're talking about the number one effect here is currency debasement. And it's a matter of how much the currency is going to be debased. It could be debased a little bit, it could be debased a lot, and it could, if the too big to fail banks go bankrupt, I mean, we're talking about, hyperinflationary levels. So yeah, it's not a pretty situation. Nobody knows, like I said, nobody knows what's going to happen in the future, but that's what's on the table. And that's why, it's not as if the US and Israel don't want to go to war with Iran. They would love to go to war with Iran, and they would have if they could have gotten away with it. They've been talking about going to war with Iran since the 1979 revolution. It's a long time. But they've never done it, and that's why they've never done it, for the reasons I just described. But this time, they might actually be stupid enough to do it. So if they are stupid enough to do it, that is what you can expect.
Yeah, thank you for that, Nick. That's truly fascinating. And, I've learned a lot just sitting here listening to this. But the main thing I've learned is I think we need to rebook you, and we need to allocate about an hour for this conversation, if not longer. Absolutely fascinating. Thank you very much. I had a couple more questions for you, but as I said, we've only got half an hour allocated for the show, so we need to fit in our Bullion Basics segment here. But first, I want to thank Nick Giambruno for coming on the show with us today. Check Nick out on Twitter at Nick Giambruno, or the Financial Underground at thefinancialunderground.com. Thank you very much, Nick, for joining us. And yeah, as I said, we'll definitely be having you on again soon.
Sounds great. Glad to be with you.
Thank you again. Pivoting over to Mark really quickly to talk about his Bullion Basics segment. Mark, what do you have for us today?
Yeah, I mean, I echo your thoughts there, Jeremy. Fascinating information from Nick. You know, he always comes through with some knowledge that we weren't aware of, and I think that's a much more in-depth analysis than you're going to find in mainstream media right now on what's happening in the Middle East. So, thank you, Nick, for joining us. Bullion Basics, guys. We try to share a little bit of knowledge with you every week. These are precious metal 101s, good refreshers for people that have been investing in precious metals for some time as well. This week, you know, with Nick coming on the show, we talked a little bit about geodiversification. So the concept of having assets in multiple jurisdictions. And one of the ways that that can happen is by traveling with your gold or silver into foreign countries. So that's a question we get quite often from our clients is how can they travel, first of all, into a foreign country with their gold or silver, and how does that work? So I'm going to give a quick run through, and then we'll wrap up this week's episode. First, point or first question that comes up when you're thinking about traveling with gold or silver is it legal? I know there's kind of like this misconception that it's actually illegal to travel with gold coins or gold bars, but in fact, it is totally legal. From a legal standpoint, precious metals are considered personal property. So you have the right to travel with them just like you would with a very nice piece of jewelry or your Rolex watch. It's personal property. You can bring it across the border. So want to put that out as a first fact. Second thing people get worried about when they're traveling with precious metals is what's going to happen at the airport. So keep in mind, when you're leaving your country, like whether it be the United States or in my case, Canada, generally when I travel, and I have carried precious metals, by the way, all over the world with me. So this is actual experience. You generally don't go through customs on the way out of the country. You only go through a security checkpoint. So that's the place where you have a little bit, I guess, of added concern. A couple of pointers when you're going through security with gold or silver. First of all, if it's in your carry-on luggage or if it's in your pockets, you're going to have to take it out anyways. That's going to appear on their X-ray device as a very dense material, and it is going to get flagged. So you should expect to have to talk about it. Don't think you're going to be able to hide it somewhere and it's not going to be seen. It is going to be seen on their X-ray device. When they ask you to see what's in your bag, you can tell them there, look, I'm traveling with something valuable. I'd like you to take me in the private room. Now, for most people, that seems counterintuitive. You don't want to be in the back room, but in this case, I recommend it. You kind of take charge, say, I'd like you to take me in the private room. Remain calm. Do not stress out. As soon as you start escalating, you're going to see an escalation from the person working on the other side of that counter. So keep things calm. Try to take control of the situation and just say, look, I'm traveling with precious metals. It's personal property. I'm bringing it with me. And as long as you kind of keep calm and have your facts in line, you really shouldn't expect too much resistance from them because, again, it's perfectly legal to do it. They have no right to your gold or silver. Just give yourself an extra 15 or 20 minutes lead time for your journey through the airport. Lastly, when you get to the foreign country, so let's say you're flying to the Cayman Islands, for example, with your gold or silver, each country is going to have a different value above which you would have to declare. So in the case of the Cayman Islands, I believe right now it's 15,000 US dollars. So if you're carrying gold or silver valued at more than $15,000, absolutely declare it. Do not try to hide it. Do not try to, sneak it into the country, because if you are found doing that, or if you're found to be lying to the customs agent, that's when you're going to have a problem. So declare it, base that on the market value, the spot market value of the product. I always recommend that, you use the full value of the gold or silver you're carrying, not the face value. I know a lot of people have tried that one in the past. I've tried it myself once and that didn't work. So I'm saying to everybody out there, use the spot market value of the gold or silver. Declare it if it's above the declaration value. If it's not above, you don't have to declare it. You don't have to say anything. Failure to declare will lead to more troubles. So that's my advice for the Bullion Basics segment this week. Again, perfectly legal to travel with your gold and silver, folks. So enjoy that.
Thank you very much for that, Mark. I will take that into consideration next time I'm going through an airport with a kilo of gold in my back pocket. That's all for us today on Inside the Vault with SWP. I want to thank Nick Giambruno for coming on. Thank you to everyone for listening. And again, to ANCAP Radio for partnering with us and hosting us. We'll be coming to you live again next week, Wednesday at 12 noon. So make sure to set a reminder when you see the notification from ANCAP Radio or SWP's Twitter account so you don't miss us when we go live. For more information on precious metals investing, you can check out our website at swpkman.com or the Strategic Wealth Preservation YouTube channel. Also, head on over to NCAP Radio. Check out Nick Giambruno's Financial Underground website. And until next week, stay safe and happy investing.
Thank you for listening to Inside the Vault, the podcast that opens the door to precious metals. We hope you learned something new and enjoyed the show. See you next time on Inside the